All right, so at the beginning of May, we talked about whether we were going to sell in May and go away or whether we're going to stay in May and make some money today. And it looks like stay in May, that seems to be the way. Because if you take a look at the chart I have here before you, now that's the last day in April. So this is technically the first trading day in May, May 1st. And if you take a look at May 1st, the range between May 1st and today, we've gone from around 500 on the S&P to about 520. That equates to roughly 4 percentage points so far for the first 2 weeks of May. That's pretty good, considering the adage, sell in May and go away, you'd be down about 4 percentage points from the beginning of May to now. So what I want to do is I want to do a review of last week's charts, and then I want to look at where we are now, okay? So last week, I showed you this chart. And I said, well, here's the low that happened in October, because I like to see 2 points on a chart, 2 major points on a chart. This is a major low back at the end of October of 2023. This is a major high that we hit around the beginning of April. Now, remember, April, the month of April was mostly a pullback. And what you're seeing right here is around the first 2 weeks of May from the lows up to where we are right now. So from here, we want to look and see, well, where are we projected to go later? So I wanted to show you a new chart. This is a new chart here, and I'm adding on something called an extension formula. So we talk a lot about retracements, that the market retraces, and we look at Fibonacci retracements. And let me just back up a second. And you can see the retracements here, all right? This is the 38% retracement. This is the 50% retracement. This is 61% retracement. That's based on the move that happened previously. So if we take this big move here, there's your 38% pullback, your 50% pullback, your 61.8% pullback. So what about if we move higher? All right, so I want to show you the extension formula. The extension formula works like this. We're going to take that move that happened from the end of October to just beginning of April. We're going to then take the pullback. And based on the pullback, we can extend outward and get an idea of where these extension levels are likely to go. So the way you do that is, it's a very simple formula. You're going to take the high minus low, and you're going to get that range. So if the high was, let's call it 400, and the low was 300, okay? Should really be the high 500 and the low 400. And we can get ideas of where these ranges are likely to go. So I just took an abstract number. So if we took, for instance, 400 minus 300 is 100, and you take 100 and you add whatever your extension is. What's 38% of 100? 38. What's 50% of 100? 50. And you add that to the high, and that becomes your extension level. So using this simple formula, if I took 100, which is my range, took 38% of that, that would be 38. Add that to your high, and your extension level becomes 438. That becomes a projection. So we can use that, and there's plenty of software out there that does that for you, that can give you that extension level, that projection level moving forward. So there's a couple ways we can do that. Now, this is TLT. Now, where is the move in TLT? Yes, from here to here. This is a big move on the chart. But a lot of folks could argue and say, you know, I think the real move is that the fact that we move down all year long. So if this is the low and this is the high, and we've had a little bit of a pullback, could we possibly see an extension back down to the bottom? There's a couple different ways you can look at these charts. So that's exactly what I did. I took not the low to the high, but I went ahead and took the low that happened back at the end of April and the high that happened at the beginning, well, the end of last year, the beginning of this year. And what we did was we looked at a couple things here. You can see some Elliott wave projections on this chart, which if the Elliott wave, if the 3 is down at the bottom, that means that the Elliott wave is projecting that the 5 is going to be lower. But what I did was I took that high to low, did the pullback, and I'm looking for that 38% extension, but to the downside. And if we're correct, then it's telling us that TLT could extend down to around the 86 area, right? Where's TLT trading at right now? 90. So it would have to come down past its low so far for this year, and then you get that extra extension below that low. Here is USO. Last week we talked about USO being in both a trend. All right, it's come up to highs for the year, and then it pulled back. So that's a trend high. We're also in the middle of a seasonal bullish opportunity, which is due to last for another 2 months. So we are 3 months into a 5-month seasonal bull for crude oil. And so taking that information and taking this low to high, if we were to come back and hit this high, where is the extension likely to take us? So we do a little bit of work here, and you can see here that Elliott Wave also supports a higher USO. And you can see where we've gone, where we pulled back, and then where's the extension. The extensions are showing 86 to 92.50. Now, obviously, I like to base my trade, just personally for me, I like to base my trade on the more conservative projection. And then I would either buy the asset or look at an option trade that makes money using the conservative projection that we see. So that's USO. How about gold? Last week we talked about gold, and we talked about the lows down here below 170 and the highs that took us up to near 222. And when we had that little pullback, but we didn't get much of a pullback at all. It's possible that we're going to see more of a pullback. But if the pullback is over and we go back above 221.22, where is the next extension level? And it shows it based on the projections we're using to be around 232 to 238. That takes us past the high that we had back in the middle of April, and then takes us on that rally to a 38 to 50% extension. So pretty interesting stuff that we can come up with here, all right? Oh, but I'm not done yet, all right? Because we have two other assets that I want to look at too. Here's the first one, Bitcoin. Last week we talked about Bitcoin, and we were looking at a shorter term move from, this is the low for the year, right? Back in the middle of January to the beginning of March, where we went from 39.5 to 73.118. Since then, we've kind of been stuck in this period of almost looks like lower highs and lower lows, right? This was last week. Here, we're going to update that, and it doesn't look like much has happened. We get a little bounce with Bitcoin today. But if you take that low back in January, you take that high that happened at the end of March, and you take the pullback that have happened, if we take that extension, we can extend all the way out to 78,000 to potentially 90,000 on Bitcoin, which comes in really good with the projections that I've been giving you earlier this year. And then Ethereum, well, Ethereum had that triple bottom. We talked about that last week. We talked about the low at 22.10, the high at 40.65. Where are we likely to go if we exceed that 4,065 level? Well, this shows Ethereum's extensions out to 44.50, above that 40.65 high. Now, finally, I want to show you this chart. Now, I'm going to tease you with this one. What is this pattern? Okay? What is this pattern? Hey, come in and tell me, all right? Give me some comments here what you think this pattern is. There's a pattern that happened in 2012. There's a bullish pattern that happened in 2016. There's a bullish pattern that happened in 2020. And here we are coming into 2024. I'm going to answer these in an upcoming video, which you all will get access to.